that okay? Please mute your. You should try to your mute your mic so that you don't interfere with the noise. So Elizabeth, you're welcome. You're welcome. If you cannot hear me, you can feel free to type in the comment section that you can't hear me so that I can make necessary adjustments. So if you can hear me, let's just get started.
Okay.
Okay, can you see my screen now? Can you all see my screen? Okay, let's get started. Thank you very much, John. So, ladies and gentlemen, you're welcome to today's information section. The information section was organized by Financial Trading Dynamics. Financial Trading Dynamics is a financial training institution. We teach people how to trade the forex market specifically to understand the dynamics in financial trading, specifically forex. And for this season, we're going to be focused more on binary options. But you cannot just jump right into learning binary options. You need to understand what forex market is all about because a lot of persons don't understand what forex market is all about. So please, you can mute your mic so that you don't distract the meeting. Please, kindly mute your mic. If you need to ask a question, you can drop your question in the chat box. I'll respond, or I could ask you to explain by if you need to explain by muting your mic. But for now, please make sure you are not in a noisy place and avoid any form of distraction. We are going to follow through this training, this information section, and at any point in time, you can call my attention if you need me to be able to respond to any of your questions. So are we clear? Is that okay by everyone? Is that okay by everyone? I need to see your response, please. All right, so let's get started. Can we continue now? Can we continue? Okay, thank you very much. So welcome everyone once again. So today's section is basically on shattering the minds on forex market and how people can trade the forex market and how you can make money trading the forex market. Shattering the minds. We're going to be taking you through what the market is all about and what is involved to be part of the market and how you can make money trading from the comfort of your home. So, and just a brief introduction about me. My name is Elijah Felix. I'm the lead facilitator at Financial Trading Dynamics. You can see my credentials. I had a Bachelor of Engineering from the University of Benin, and I went on to pursue an executive mini MBA at Accra Business School. And then, of course, I've been involved in so many leadership training programs as a leadership and youth development enthusiast. I also participate in several programs around women inclusion in leadership and decision making. That's why we're able to secure some sort of fee waiver from our partner organization, Pan African Women Network, to slash down the fee training fee for every woman that may want to participate in the training program, because we're trying to contribute to women inclusion in leadership and decision making. It's a common knowledge that if you check the statistics have shown that there are more men than women in the financial trading sector. People that participate in stock trading, forex trading, other forms of equity, bond, and all those things. If you go to Wall Street and several big financial centers in the world, you see that the women that participate in this the financial or the capital markets are usually very, very few. And those few women are actually one of the best, because if you talk about the statistics, you have more men that few compared to more women, compared to the number of women that few. So most of the women that participate in financial trading are actually one of the best set of traders. So it's like women are always very good at whatever they set their mind to do, probably because it's an inborn nature for them to always incubate and develop. So that one is another information for another day. But for now, you can see that that's what we're able to secure some sort of fee waiver from our partner organization, Pan African Women Network. And over the past 1 year or 3 years, I've participated in several leadership activities, both within and outside Nigeria. I've facilitated in several business and youth development activities, both within and outside Nigeria, and also participated in other international symposiums, including model events, both within and outside Africa. And since 2013, I've been a discretionary trader. Yes, I started trading from the university while I was in the University of Benin, and I was basically self-taught. And occasionally I participate in some professional training programs by world professional traders, global professional traders. Like during the lockdown, I remember during the lockdown last year, there was a man called John Bollinger. John Bollinger is one of the financial legends in the financial sector. When you talk about being able to understand the market contraction and market expansion, he was one of the persons that contributed to the development of a certain financial statistical instrument that is called a Bollinger Band, to be able to measure the contraction or volatility of the market. So last year I was organizing some sort of free training conference. I had to participate because some of these training programs are usually very expensive. We are talking about tens of thousands of dollars. So if I cannot afford to pay at that time, what I do is I go for the one that maybe they are giving some giveaways. Sometimes they admit people for free, and I take advantage of this opportunity to learn. So I've been trading by myself since 2013. I've known about forex trading right from when I was in high school, and then I started trading actively from the university in 2013. Yes, as a self-taught trader, we experienced so many losses. I experienced so many losses. I know so many blowing up of accounts, but I never gave up. I kept learning until I get to a stage where I became confident and consistent. I decided to put it out there and made it public so that any other young person that want to learn how to trade, especially young women, because my concern is how to encourage women to take on activities that will make them economically empowered, and also young people too, to make them economically empowered. Because women don't belong to the other room or just the kitchen. They don't. That's, as someone said before, women can actually achieve whatever they set their mind to achieve, because they are also leaders and partners for growth. So I've been able to successfully grow micro account. When I mean micro account, I mean account less than $100. I've been able to grow tens of dollars to a few hundreds of dollars. I've done that, and I'm working on to some extent, I'm consistent to a very good extent, but of course, there's always room for improvement. But I'm very confident enough to be able to put out this information, to be able to teach people how to trade and learn how to build themselves and their trading strategy. So this section, this information section is basically just to introduce us and make us understand, introduce us to Forex market and make us understand what the market is all about. And then you can actually connect with me on via social media, my YouTube channel. I have a personal YouTube channel where you can check out some of my leadership activities over the past 1 or 2 years. If you go to Elijah Felix at YouTube, on YouTube, you can search for me on YouTube and you can watch some of my videos on leadership and also my other women related activities, women empowerment, youth empowerment. Also, you can also watch Forex videos, financial trading. We have a YouTube channel dedicated to Forex education. It's called Financial Trading Dynamics. After this class, I'm going to upload this video to this section. I will upload it to the YouTube channel and also share the link to the WhatsApp group. Then on Facebook, you can connect me on Facebook, my name, on LinkedIn, and on Instagram at Elijah U Felix, and on Twitter, and then on WhatsApp. We have a dedicated WhatsApp group for financial trading dynamics, and also on Telegram, financial trading dynamics. The WhatsApp group chats. Some of you are already there. We are going to also send the link to some other person. We'll drop it here before the meeting, and for some of you that are not in the group to be able to join. So that's that for the introduction. If you have any questions to us, you can always feel free to ask me anytime, and drop your questions. I'll look at them. And then for this section today, we're going to be having looking at 5 modules basically. Can you see my screen clearly? If you cannot see my screen, let me know, please. I just want to know I'm carrying everyone along. Can you see my screen? Okay, thank you very much. So for these modules, we are actually dividing our learning into. Elizabeth, your hand is raised up. Do you have a question to ask if I continue? Or probably it's a mistake. For Larry Elizabeth, you can unmute yourself if you have a question to ask me. You don't have a question to ask? Okay, let's just continue. So for this presentation, we have 5 modules we are going to consider that will further help us to understand the shattering the minds and the making money from trading forex. And then for the modules, if you can see them, the module 1 we're going to be looking at historical background and what is financial trading. Module 2 is going to be how it works. Module 3 is how to trade, and module 4 is why people feel psychology. Module 5, with the final module, is going to be participating in the financial trading dynamics basic option class. That is our forthcoming training program. So for module 1, what is financial trading and introduction to forex? I'm going to ask a question. What is financial market? Does anybody want to help us? Anybody, you have an idea? Maybe you read economics in your university, you studied economics, or you studied a social science course, and you have little idea on what financial trading is all about. So please kindly respond to the question. Waiting. If you have an idea what financial market is all about, respond to this question. I'd like to hear your thoughts. Should I call names? Do you have an idea? Just feel free to respond. Who want to help me? John, are you there? Do you want to unmute and answer the question before we continue? If you have faint idea, nobody is going to be wrong in this section, because whatever answer you give is going to be a reflection of your state of knowledge. But hopefully after this section, I'll be able to orientate you on what the market is all about and how you can participate in it. So who is there? Who want to help us? Is Folari there? Elizabeth? Esther? Anybody? Okay, John, please unmute yourself and answer the question, please.
Okay, so the financial market refers to, it's simply a marketplace where not like the normal marketplaces will go to, but this is where financial assets are traded. Financial assets would be currencies and bonds.
Okay, thank you very much.
It also plays an important role in country's economy typically. So the way their resources in the country are kind of allocated is closely linked to how their financial market is the financial market runs. Let me use that language. Thank you.
Okay, thank you very much, John. You seem to have a very expert knowledge. Anybody want to say something before we continue? Esther, are you there? Do you want to say something? Who again is there? Elizabeth. I have one other person here. Is it Fisa or Oladayo? Do you have an idea? You want to say something? You just say something before we continue. Okay. If nobody is saying anything, we'll just continue. But at any point in time, you feel free to ask me questions and also feel free to contribute. I don't want it to be a one-way traffic. So just like John said, financial market refers to the marketplace where creation and trading of financial assets takes place. These financial assets could be stocks, it could be bonds. Of course, you know what is bonds now: government bonds, treasury bill, financial derivative and indices, commodities, precious metal, foreign exchange, and cryptocurrency. Now, you know what they call commodities. Commodities is like your crude oil, they call it energy. Energy is, UK will say, I think UK will use Brent oil energy, while America will say crude. And if you check some brokers, when they give you a list of their assets, these are things we'll be talking on maybe during the practical sections when we eventually start our actual training section. So then foreign exchange and then cryptocurrency. Now, of course, you know about cryptocurrency. In the past, since 2016, I think crypto really started from, I think 2013 or so, thereabout, if I'm not mistaken. But a lot of persons got to know more about it and were excited to participate in cryptocurrency, especially at this part of the world from around December 2015 or early 2016. That's when a lot of persons wanted to buy Bitcoin. Bitcoin was rising at some point, and later Bitcoin was falling against the dollar or something, and now it's rising. But at this point, I think Bitcoin is going to be rising for the next couple of years. We are still going to be experiencing an increment in the price of Bitcoin, but intermittently there will be a form of drawback. They call it drawdown, where it will rise. Like I think 2 weeks ago, Bitcoin was almost hitting 20 million naira equivalent, and just recently it fell down or so. If I'm not mistaken, about 15 million or so, and consolidating around that range means that it's just beating itself around that range, and hopefully it's going to rise again. So there are many strategies and um, processes when it comes to understanding these things. So basically, all these are called the financial markets. But amongst all these financial markets, the one that is very common among people, most times when you mention forex, they don't know about it. People know about stocks. Oh, buying company shares. What they just know is that, oh, let's go and buy first bank shares. When it rise, we'll sell it. That's the traditional way of trading. When you listen to news, you want to trade. But then recently, people now begin to understand, oh, forex. Although forex has been existing, when you go to Malam to go and change or Abuki, borrow the change, you want to buy dollar, but they don't really understand this, that this thing can be done in a very electronic and systematic way. So if you check this, like according to the information statistics, um, the forex market, an average of over 5.1 trillion US dollar is being traded daily. That means every day, the statistics, daily statistics, 5.1 trillion dollars is being traded daily on the forex market. It means that every day, the cumulative result of people buying and selling different currency pair is the money is being accrued over time for a day is usually over 5.1 trillion dollar. Whereas in the stock market, like the New York Stock Exchange, we have Nigerian Stock Exchange. Even though many of us, we Nigerians, we don't really understand how Nigerian Stock Exchange operates, because sometimes the sector is kind of, the development in this sector is very slow. What I mean is that their electronic access to the Nigerian stock market is usually basically for mostly the stock exchange itself. You rarely get retail traders getting access to the charts of the market. I don't know why it's so. I think it's as a result of what the policies or the regulatory rules or something from the Nigerian government. So if you go to US markets or the US stock exchange, the way they trade the New York Stock Exchange is different from the way they trade Nigerian Stock Exchange. In the New York Stock Exchange, they actually allow the access to anybody around the world. So I can actually place trade from here in New York Stock Exchange. I can buy any stock, Nasdaq, Facebook, Google, mention them, all those S&P 500. From Nigeria, I can actually invest in US stock. So they don't just restrict the access to people. But in Nigeria, here, we have restriction of access. You can't really even have access to the chat. You only rely on what the news say. When you are listening to channels news in the night and Business Daily, they'll say, okay, at the close of the day, Dangote stock increase, Dangote sugar rose, there's a kind of a commodity, or crude oil fell, or Access Bank or First Bank share increase. That's just what they tell you. Those things are called fundamental analysis. They're just giving you the news. You don't see the charts because of our level of development. So maybe in the long run, I look forward to working with the Nigerian government in enhancing more access to Nigerian stock exchange. That would be like a challenge to myself and sure to maybe some of you here when you pick up the interest. No, now the New York Stock Exchange is the biggest stock market being traded in the world because anybody can access it. You have New York Stock Exchange first, followed by you have uh, you have New York Stock Exchange first, you followed by you have the second most largest stock exchange is Japanese. There's they call it Tokyo Stock Exchange from Japan. Of course, you know Japan is a very large, big economy with a lot of manufacturing and producing. Then followed by the London Stock Exchange. We have other ones too, that are Sydney, Australia, and the rest. But these three are the major ones. But among them, the US stock market, the New York Stock Exchange is the biggest of all, and a daily average volume of over $2.4 billion is being traded every day. Now, if $2.4 billion is being traded every day in the New York Stock Exchange, whereas in the forex market, the global forex market is $5.1 trillion, means that $2.4 billion. How many $2.4 billion can you have in 5.3, 5 point, or let's say how many let's just call this one $2.5 billion. How many $2.5 billion can you get in the $5 trillion? I guess it's going to take us about 2,000 of these, right? By the mathematicians in the house. John, is it not correct? I think 2,000, if it times $2.5 billion by 2,000, you get $5 trillion. Am I correct? Am I correct? You can drop your or if you can unmute and respond, please. So let's just continue. Now, if $2.4 billion is being traded every day in the New York Stock Exchange, it means that the New York Stock Exchange, which is the biggest stock exchange in the world, is much, much smaller than the global forex markets. So now the question is, how did it all begin? A bit on history. If you have questions at any point in time, please feel free to ask me, drop your question or mute and ask your questions. Now, how it all started during the wake of the Second World War in 1944, you know, of course, some of you that did international relations, do I have any person that read international relations here or law? I know some of you that did government too. You always have access to some of these news about World War, Second World War, First World War, some other revolutions and all those things, political revolutions and all those things. So now, during the wake of the Second World War in the year 1944, I think it was agreed upon at Bretton Woods Conference that um, the US dollar would be the currency at which traders should make their medium of exchange. Prior to now, a dollar actually was not the currency in the US. In the early days, I think the British era, right from the war with America versus the British, when they fought to gain their independence, and later they got their White House from George Washington era and all those things, you can see that the US dollar was actually not a currency. The US dollar was a representation of a currency. The currency they had then was everybody was using gold. Gold was the medium of exchange most times. Gold and precious metals. Gold was the biggest. Gold was the highest. So everybody valued gold. So what they do was that they do this IOU system. IOU system means that they have this, like, you go and deposit the amount of gold you have in a certain bank. They have local bank that time. We're talking about the 18th century. Now this local bank, they will keep your gold, give you a certificate. That certificate will be written to the amount of gold you have. So like the certificate or something you call like a paper certificate or something, that certificate will show that, okay, this is the amount of gold you have in this bank. So it's going to, if you want to buy something from someone, you don't have to go to the bank to go and move your good to buy something from the person. You just need to go, especially if the person is within that same town or city you are. You just need to go give the person that is an authorized certificate from you, showing that you are authorizing the person to collect a certain number of good from that same bank that issued you the certificate. So let's say you want to buy a horse, for instance, because there was not like a car then. They basically deal on horses. Am I right? Horses, cat, and what have you. So let's say you want to buy a horse and the horse was worth, maybe, let's say if it is 100 ounce of good, they'll give you a certificate that is that signifies that, okay, you can transfer 100 ounce of good to this person. So that certificate, actually, those things were actually called the dollar bill. That's the way it continued then. Dollar was a representation of gold, the amount of gold you have in your bank at that time. It was not actually the currency itself. It was later, I think, during Bretton Woods, that period, things changes over time, a lot of things evolved and all these things. So, and then people decided to store the whole gold in a reserve or something, and then eventually they made the dollar bill a legal tender. It's not a money. So now, then Bretton Woods during the Second World War, world leaders, some major countries in the world that wanted to fight with Hitler at that time, Adolf Hitler, they came together and discussed, okay, we need to have a medium of exchange because we're going to be sending our soldiers to go and work together. Like some US soldiers have to travel away from America to Britain to work with France army and something, and then they will have to launch an assault on the German military. So it was agreed upon that the US dollar would be the currency at which countries should trade with. So whatever currency you have to first of all exchange it to dollar before you then give the equivalent to another, maybe transact in another country. And it was pegged at 35 ounce of gold, 35 US dollar per ounce of gold. So this continued up to from 1944 to 1971, when the then President Richard Nixon introduced a floating rate exchange rate for the US dollar. So now, that time, the US dollar had a fixed exchange rate with major currency like British pounds, German, France, and there was a fixed exchange rate. So the government is the one that fixes the rate. This is how much we want to be buying the dollar, pegged at 35 ounce of gold. But when the US president at that time introduced a floating exchange rate, it made the US dollar to float with respect to the market pressure from major currency, just like the way this water is. You see the water, the the boat on the water floating. So if the water is turbulent, you see how the boat we always want to, and if the water is gentle, you know how the boat will be like. So this is the way it is. Just basically it's going to be, if the economy is turbulent, it means that the exchange rate too will be experiencing some sort of rise and fall. So that's that for the history. Before we move to Moody 2, we have some people raising up their hand. If you have a question to ask, please ask your question. You can unmute and ask before we move to Moody 2. John, you raised up your hand, and one other person. Please ask your questions. I'm waiting. If you have a question to ask, please ask your questions. Do you have a question to ask, or can we continue? Can we continue to Moody 2, or do you have a question to ask? I'm waiting. Elizabeth, John, Oladayo, Chioma, Esther. If you have a question to ask, let me know before I continue, please. You can unmute your mic.
I don't have a question actually. I don't have a question right now. I totally understand what you explained, Elijah.
All right. So, John, do you have a question to ask before I continue? Okay, please, someone should help me copy the link of our WhatsApp group and post on the group chat for the benefit of some people that are joining that might not be in our WhatsApp group. John, can you help me do that? Just copy the link. I think the link it was posted there on the group chat. Copy the link of our WhatsApp group and then post on the comment section so that anybody that is not on the WhatsApp group can join up for further, because this slide, I'm going to share it on the group. After this training, I'm going to post the link to the YouTube video I'm going to upload, because I will upload this video to YouTube so you can watch it and learn and relearn, learn and understudy it. And also, I will post this the slides. I'll post it on the group chat too, so that you can have access to it for your own personal study. So can I continue now? All right. Oladayo said no questions. Okay, I hope if you're enjoying the section, can you type 11111 so I can know I'm not just I'm not boring you with too many history. So please type 1111 if you want me to continue and you're enjoying the section. Okay. Thank you very much. Thank you very much, Yoma. Thank you very much. Thank you very much, John. Thank you very much. Thank you very much, Jang. Thank you very much, Oladayo, Elizabeth. Thank you very much. Okay, let's continue to module two. So module two is all about what is Forex and how it works. Who are the participants? Now, I've told you that Forex market is the largest of the financial market with an average volume of over over $5.1 trillion traded every day, which is much bigger than the New York Stock Exchange that has a daily average trade of over $2.5 billion. Now, forex is just simply means foreign exchange. Foreign exchange. Does this look familiar? Some of you that goes to bank, I'm sure you see something like this. There's this kind of board that they normally hang, I think usually close to customer service. You see something like this, where they will put some major currencies, France, dollar, euro, Japanese yen, and then they'll put some values. Buy, we sell. I don't know whether you've taken note of that. If you have seen it in the bank, type a yes in the chat box so I can see. Have you seen something like this in any of the banks? Probably any of the banks you deal with. Thank you very much, John. Good. So now it means that forex is basically foreign exchange. It means the simultaneous buying and selling of a currency. So the forex itself, in forex market, currencies are traded in pairs. You cannot just say I want to go and buy dollar like that. If you are buying dollar, it means you are selling. If you are buying dollar, it means you are selling the naira to buy the dollar. Let's say you are in Nigeria now, you go to the bureau de change, go to one malam, probably in somewhere around the airport. Let's say you want to travel out, like Dorcas. Where is Dorcas? Okay, Dorcas. If she goes to the airport now, you see that there is this they call bureau de change at the airport. Maybe you go downstairs, it'd be like in Murtala Mohammed Airport. You see them in the basement. When you climb to the arrival, you see them there. You want to buy dollar, you just go and meet them. I want to buy dollar, or I want to buy pounds, or I want to buy, depending on the currency, the country you are traveling to. So you definitely have to sell. It means that you're selling your naira to buy that currency. So foreign exchange is more like a handshake kind of system. As you are buying a currency, you are simultaneously selling another currency. So that's the way this thing works. So, and then when you go to the bank, what you see is they normally buy at a certain price from you. It means that you're selling to them at a certain price and they are buying to you at a certain price. So the handshake. So then who are the participants in the forex market? I'm sure you must have heard about the 80-20 rule. Look at this bicycle. The bicycle. You've heard about 80-20 rule by Brian Tracy. I think Brian Tracy wrote a book on 80-20 principle. There's always this talk about 80-20, 10-90. They will say the 10% of the richest people in the world, they have the words that the 90% people has. Isn't also, or more than that, more than what the 90% of the rest of the people in the world has. Or let's use Nigeria, for example. 10% of Nigerians actually have the kind of money that the remaining 90% of Nigerians had don't even have, maybe a little bit more than that. How much is Dangote worth in billions? You can research that. So there's this 80-20 rule. Brian Tracy will tell you that what 20% of the activities would you do that will account for 80% of your success? Because it's true that you can major in minor and minor in the major. That's prerequisite for failing. If you want to succeed in life, you need to major in the major and minor in the minor. So Brian Tracy will tell you, Brian Tracy is more of a success leadership psychologist and a life coach. So he will tell you that participate in 20 or engage in 20% of the activities you need to do in life so that you can account for 80% of your success. Because if you participate in 80% of the other activities that might not be able to account for up to 20% of your success. So this same principle applies to so many things in life. If you go to a vehicle, a car, just a very small part of that car controls the car, which is steering. If you go to a ship, the same thing, a small steering that the captain or the sailors will use to turn the ship and all these things. Then use the bicycle for instance. Look at this, my bicycle here. Choma, does this look like your bicycle? So you can see when you put your pedal on the bicycle, that small part, the small pedal, it actually decides how you go forward or go backward. So that's what controls the larger 80% of it. So this same principle applies to the forex markets, the financial market in general, but specifically for the purpose of this training, where our focus is on forex. We're not talking about stocks, we're not talking about crypto, we're not talking about indices, even though these are part of the global financial market, but our concern is on forex. But basically, these markets share the same similar market theories. But like I said, our concern is on forex. Now, the participants in the forex markets are usually, you can see them, see this small orange, this small orange amber sector signifies what? Multinational companies and government financial institutions. You can see my chart, see where I put my cursor. So like multinational companies, like multinational companies, you have ExxonMobil, you have which of them, Halliburton, you can mention big multinational companies that deal on commodity in a large scale commodity like crude oil, sugar, beyond. They don't do it just within their country, they do it beyond, across border. ExxonMobil exists in so many countries. Same with Halliburton. Mention many of these big companies, Brent, all these things. They are everywhere. So like these multinational companies, most of them they control energy, commodities, and some of these things. And then you have government financial institutions like government exchange, like the New York Stock Exchange, the government, more like a governing institution, kind of somehow remotely connected by the government. And then you go to Tokyo Stock Exchange, you go to Sydney, what have you. Then you come here, you have large commercial banks. Every bank. I'm sure you must have heard about, if you want to transact money from, let's say you want to transfer money from Nigeria to Ghana, let's say from Nigeria to US. For instance, you want to transfer money from a Nigerian bank to a US bank. How do you think it works? Do you think that you just go to your bank and just instruct your bank, or maybe just use your mobile app, and maybe your card, just go and pay for the product online? Don't you think there's a channel in which the money passes through? So there's what we call large commercial banks. They call them banks of banks. They are not central bank. Central bank is even different. I think central bank should fall more on, okay, I will still put central bank under government bureau, but this large commercial bank, they are actually the one closest to central banks, government institutions. These banks, you have city banks, you have JPI, JP Morgan Chase, you have many of them, many of them. So they call them banks of banks. So let me give you the pathway. Let me just give you an example. Let's say you want to transfer money from a certain bank in Nigeria to pay for your school fees in one school in the UK. Look at how your money goes. The bank, your school, they will give you something that they call SOT. That is the school you want to pay. I'm back now. So can you see my screen now? Can you see my screen? Can you see my screen? Let me know if you can see my screen, please. So can I continue?
Yes.
Okay, thank you very much. So now,
Yes.
if you are transferring, I was saying something now, if you're transferring money from, let's say you want to pay your school fees in the UK, so the school you are paying your school fees to, they have a bank. That their bank, they will give you their sort code and SWIFT code. I'm sure you must have seen those things. I don't know whether some of you have seen those things. Some of you that have been privileged to work in a bank, or maybe being privileged to want to send money abroad, they will tell you soft code and SWIFT code. Now that's your source code and SWIFT code. Usually that bank, they have a bank that they bank with. So your own bank in Nigeria, possibly, most likely, they have their own bank they bank with. Let's say you are transferring the money from UBA Bank, and UBA Bank banks with Citibank. So Citibank, now maybe Citibank, also that school, that's what do you call it? That school you are paying to, probably their own bank to bank with Citibank. So they have an account number with Citibank. Your UBA too has an account number with Citibank. So they will just instruct you instruct UBA you want to transfer money to that other bank in the UK. So what they will just need to do is to UBA will send the money, you paying the money equivalent to your account, and they will send the money from your account to their own bank in the UK or wherever they are banking, Citibank, for instance, and then instruct Citibank that Citibank will, this money we are paying you, please pay this bank. So Citibank will not pay into the account number of that same bank with them. Then it will be reflected on that bank account. that they've been credited following this transfer instruction from so country for so purpose. So this is the way it's been done. I know some of you may have not heard of this thing before. Each bank have their bank, so there are banks of banks. We're not even talking about Federal Reserve now or central bank. Central bank, Federal Reserve is another form of bank, bank of bank, basically government-owned bank trying to regulate the fiscal or financial policy. So economists will know that one. So like we have large commercial banks, you can see them here. They are the one that even play mother role, and then you have this one. You have the government now. Government bureaus, this particular sector, government bureaus like your central bank and your various government regulatory firm or organization. So these are basically the players in the forex market. And then the remaining ones, you see the remaining large percentage is called retail traders. The retail traders are you and me and you. People that go to Alabama go to go and buy or go to the airport to go and buy dollar or pounds. This is see where we belong to, this place. So you can see all of us like this put together like this. The money we transact daily is not up to what these people, this as small as they are, these people they transact trillions of dollars every day. We, our own, if you add all our transactions, it's not more than these people because you need these people to even transact. You can't transfer money out of the country to another country without this other side of the chart. So that's why I talked about the 80-20 rule. It means that 80% of us in the market, we just contribute 20% to the about let's say 20% or less to the forex market. Why the remaining 20% of the participants contribute more than 80% to the forex market? Do you understand? Now we have the sections, the different sections that are trading sections, because the forex market is actually a 24/5 market. Means that it exists 24 hours, 5 days. Actually, you can buy and sell currency any time of the day. It's 24/7. But because of the banks, because you need banks and regulatory bodies to fund. Sorry, interference was just experiencing sort of net. So let's continue. Sorry for the network glitch. So now for the trading sections, we have four major trading sections in when it comes to financial trading. We have Sydney, which is from Australia, Sydney section from Sydney Stock Exchange. It's always open at 8 a.m. local time, local opening time. Local opening time is 8 a.m. while in GMT is 10 p.m. So 10 p.m. So by 10 p.m. GMT, that is by 11 p.m. Nigerian time, the market will actually open. The market will open, and then we have Tokyo Stock Exchange, which will open by 1 a.m. Nigerian time. That's 12 a.m. GMT. We have the London's markets. London markets open 8 o'clock GMT, which is 9 o'clock Nigerian time. And then New York Stock Exchange will open at 1 p.m. GMT, which is 2 p.m. Nigerian time. So these are the various trading sections. So that's why you can see that when one of the market is closing, another market is opening. So it makes the market 24 hours around the clock. But however, the market don't open weekends, Saturdays and Sundays. The market will close at about, let's say, by 10 p.m. on Sunday, Friday night, and open 10 p.m. on Sunday night. So by 10 p.m. tonight now, the market will open. So now this is the waste. Okay, we are back. So just keep. John, I know you have friends that works in. Can you just call them and beg them so that they will allow my network to stay, please? So now let's continue. So for analyzing the markets, we have two ways of analyzing them. I want to be very fast because this one, the network is misbehaving, and then sadly enough, the power has been interrupted. So very soon my devices will run low. So let's run as fast as we can. But if you have a question to ask, always ask me anytime. So the ways of analyzing the markets, you can analyze the market either through fundamental analysis, which means analyzing the market based on news. Those things they do in channel TV or AIT or NT. When you watch news, they'll be talking about Dangote stock, how the dollar rose or fall. Those things are called market analysis. Fundamental analysis means that you're analyzing the news. So fundamental analysis is news analysis. Fundamental analysis is news, and you can make money from a good economy or a bad economy. And then the other way, what happens in the news, what natural disaster can actually affect policies that can affect the economy of the country. This is in turn reflected on the charts. So you can see the chart here. This is the chart. It's a candlestick chart. During our training program, I'm going to be talking about the history of candlestick. Is something I'm not going to say now, but maybe when we start our training program eventually, I'll tell you how candlestick came about. Because in the 80s, in the early 80s or late 70s, in the Western world, they don't really use candlestick. Sorry, my network is just fluctuating. Okay, so like I said, in the early 70s and early 80s, there was nothing like candlestick for Western world. Candlestick actually emanated or originated from Japan. Japanese candlestick, one man called Homan was actually the one that created it. I'm going to tell you about that later in our subsequent training programs. But now what you just need to know is that the news affects the market, and the market is being reflected on the charts, and technical analysis is basically a mathematical statistical analysis of the charts. So that's basically how it works. Now we're going to go to module 3, how to actually trade, how to trade, how to trade, how to trade. We talked about how it works. If you have any question to ask, kindly unmute and ask your question, because I might not be able to read chat now. I want to run at speed of light. So you can quickly unmute, raise your hand, I'll acknowledge you, or mute, and then you ask your questions. Is that okay? So let's continue. So how it works. Accessing the forex, this is how to access the forex market. I told you about retail traders, you and I. We access it through an electronic brokerage system. An electronic, unfortunately, I can't show you my chart now, my own. I would have logged on to my 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 uh, my trading software to show you how it works. The other laptop I use for trade just ran down now. So, and we're yet to get power supply. The generator will be on later in the night. So there's nothing I can do about that for now. So you pardon me. Maybe subsequently during our training programs, I will show you more on those. But what you just need to know is that you need to, as a retail trader, you go through an electronic brokerage system, and then the electronic brokerage system is being regulated by a regulatory body or an exchange. And then in turn, this exchange will not give you direct access to the forex market. So this is how the way it flows, the chart flow. And then this is in expansion. I expanded it. This is the retail trader to hedge funds or electronic brokerage system, retail market, and then to small size bank. Because of course, you need to fund your account through banks. And then in turn, these banks are controlled by some central exchange, which are also tied to a major bank. What I told you about those large cap commercial bank. So this is basically the way it flows. Now, how to trade? Basically, now I told you that currencies are traded in pairs. So let's say you are buying euro USD. I'm sure you must have seen this in the bank, like I said. So this, if you are buying a currency and you are selling another currency, let's say you are buying euro and you are using US dollar to buy the euro. It means you want to change your dollar to euro. Now your dollar is going to be your quote currency, while your euro that you are buying is going to be the base currency. So the base currency is the currency of reference, the one you are either buying or selling. While the quote currency is the one you're actually changing it to, or the one you are selling. So and then usually in the banks or exchange flow, below the change, what you see is different prices. They will tell you that they sell at this same amount and they buy at this amount. So it means if you want you, that is, they are telling you what they do. If they are buying at this amount, it means that I'm coming to sell to them at this amount. And if I'm coming to if I'm coming to buy from them, that means if I'm coming to exchange my euro for US dollar, they are going to sell to me at this amount. So this is the way it works. So two currency, it's always, so that's why when you open your forex chart, you see that there are always two currencies where you want to buy or you want to sell. But that's the way it is. And then how to trade, basically, this is how it works. Now we have two types of markets. We have the bullish markets. Bullish markets, because it's a bull. Look at the way bull works. The animal called bull. It works like this, it moves like this. Means that it's always lifting his head up. So financial market legends, they name the rising market as bull. They say when the market is bullish, it means that the market is rising. Now in a bullish market, because we have two ways of trading we have many ways of trading through participating in the forex market, but as a retail trader, the two major ways of trading in the or participating in the forex market is either you trade as a margin trader or as an options trader. So basically, for now, I'm focused on binary options for now. Maybe later I will still do training on this one, margin trading. But for now, I trade binary options, and that's what our forthcoming training will be all about: how to make money in minutes. Binary option is otherwise known as high frequency trading. Now, the bullish market, bullish market rises like this, it rises. So when the market is rising, it means that the price is actually going up. So what you do now as a trader, it means you buy. If you buy actually an asset, just like stock, they will tell you that, oh, they will hear the Access Bank stock want to go up, or First Bank or Dangote stock want to go up. What will you do? You go and buy the stock, so that when it goes up, you can sell it at a higher rate and make gain. That's how this thing works. You buy low, you sell high. You buy low, you sell high. The same principle. So it means that you buy a certain financial instrument at a lower price because you think the price will go up, and then you sell at a high price. That is what margin trading is. Therefore, binary options trading, you actually buy a premium. You buy a premium when the contract, and when the contract expires, it will be sold at a higher price. If the price actually goes up, they call it call options. You will actually sell it and make your gain. But if the price does not go up, if it goes against you, you will lose the initial money you use in buying premium, buying the assets. So that's the way this thing works. Binary option is different from this. This one, if the market actually go down, you're actually going to lose the amount of pips. Pips is the unit measurement of price you actually staked. So all these things will be explained in detail in our forthcoming trading. Now, how to make money from the selling market, because some people don't know that. If you are trading over the counter, if you are trading forex markets or trading on the spot trading, if you are if you are going through bureau de change, you only make money from dollar when dollar goes up. Most times, yeah, you go and buy dollar and they will increase it. When it's crashing, they will sell their dollar and then maybe convert. You want to sell your dollar. They don't have any business. You are buying and selling. But in this market, like in Bitcoin, now let me use Bitcoin for example. People buy Bitcoin. They just know, they don't even know when to enter. They don't rush and buy. Oh, I heard Bitcoin is rising. You don't know anything about the chart or market analysis. You buy it. And the moment you just buy the Bitcoin, that's the time the market starts to reverse, what we call drawdowns. Even though we know that in the long run, maybe in the yearly chart or monthly chart, the chart is telling you that the market is going to rise for the next 6 months. But intermittently, there will be a period of drawdown. So when you buy, when you're not supposed to buy, the market moves against you, you lose money. But then, if you know how to trade, you know how to make money from both a falling market or a rising market. So a bear market is a bear market. Sorry, this is bear, not bullish. Let me correct it. Yeah.
What is this?
This is bear market. Sorry about that. It's a falling market. The bull market is a rising market. Okay, I've corrected it. Now you can see it. You can see my chart. So you can see my screen. This bull market is a rising market. I've explained how you can make money from that. Then bear market is a falling market. Now bear, the animal called bear, this is the way it moves. It moves like this. No, bull moves like this. Why bear? Bear moves like this, as though he's putting his head down. So that's why they call it bear. Bear. So when the market is bearish, it means the market is falling. Now, how do you make money from a bearish market? It means that if you are trading as a margin trader, the broker you are trading with will borrow you a certain amount, fixed amount of money to sell, because they believe that the price is falling, or because you think the price is falling, you want to sell, but you cannot just, since the market is already going to fall, you can't buy at that time. What you just need to do, the broker is an automated system. You don't even need to know about how it's going to be. You don't need to worry about interest rate, or am I borrowing money, or do I need to fill any form to apply? You don't need to. Everything is automated at the click of a button. The whole thing is being done. I'm only just explaining the process or the algorithm behind what you see, the clicks of the button. So the broker will borrow you certain money to sell, and when it falls, you've sold it to at a high price. Let's say you sold Euro USD at 1,000. Let's just assume. Okay, let's just say gold is going to fall from 1,000 to 500. Let's just assume that you sold let's say you sold 200 ounces of gold at $1,000 each, which is $200,000. That means you've sold it and you've gotten, they borrowed you, the broker gave you the gold. They gave you 200 ounces of gold to sell. They borrowed you, and sell it. You sold it at $1,000. Now the price fell back from $1,000 to 500. I'm just assuming. Now the $500 now is the gold has fallen from 1,000 to $500. Now you need to return back the 200 ounces of gold back to the broker. So you will not buy back at this point when the price has fallen. Remember, you sold it 1,000 and 200 ounces of gold at $1,000 each. So that is $200,000. You have $200,000 already. Now you now come here when you want to return back the gold, you need to return back the gold to the broker. You now have to now buy back the gold at lower price. So you're not buying it at 500. If you buy the gold at $500, 200 ounce of gold at $500, you are buying at $100,000. Now, if you minus $100,000 from $200,000, you've made $100,000 gain. That's the way this thing works. Then you give back the good to the broker. Now, you wondering how will the broker make their money? Don't worry, they make their money from the differences in buying and selling. They call it spread. This value you see here, this minus this is 16, Abi, or what's this? Yeah, 16. This minus this means 16. So that means 16 points are going to the broker, which is how many people? 1.6 people. It's something you will learn later. I won't explain now. It's beyond the scope of this discussion section now. So that's how they make their money. Also, they make their money too from interest rate over a year. Maybe let's say if they are going to charge you 10% or 20% for the whole year, you divide it by 12. So like the money you are going to be paying will be very, very small. It could be just maybe 1 point something dollar. You won't even feel it. But they make their money from volumes, from turnover. Do you know how many traders are making that same transaction on their system? So that's how they make their money. So I'm back now. John, you need to talk to your people. They should release my network. Now let's continue. So basically, for binary options, the same thing now. They buy a premium because they believe that the contract will expire below, when it expires, it's time-based. It will expire below the spot price. So when it expires, they will have to sell it back at a higher price to gain back. They sell it back at a higher price to the broker, and then you make your gain. So that's the way this thing works. If you lose, if this market actually goes up, you lose the amount you still here. That's what I'm going to do. The same thing with this one. If the market actually and went up more, the broker is going to collect the money from you based on the money you deposited in good faith, which is called margin. It's something that will be taught later. So let's go on to module 2. Module 4, we are rounding up. So I just want to be very fast before I have a shutdown. So why do people fail in forex trading? You can see that there are a lot of minds about trading forex. So people don't really understand what they call forex trading. Everybody just talk about forex. Does it make money? Make money from forex? Do you lose money? The market cannot crash anyhow. It's a lie. The market in forex market, yes, it's true that market crashes, market boom. What is crash? If a currency pair crashes, it means that if one currency is crashing, it means that another currency is rising. That's the meaning. So you can always make money from whether the market falls or rise. If the market falls or rise, it does not concern you. What concerns you more is to understand the news and to place trades, look for good entry position to place trade. Now look at my trading algorithm, the algorithm of a successful trade execution. This is what I'm going to explain to you during the course of our training. Now you watch the news. When you wake up in the morning, you want to trade, you watch the news. Let's say there are many news agencies. I will tell you about some of them, like Bloomberg, Reuters, Forex Factory. I'll teach you how to observe or watch the news or analyze the news later. When you watch the news, you already have a sentiment of what the market is going to do. Like, oh, they said Donald Trump is going to, okay, we have Biden now, Trump is out. Biden is going to implement social policy that will make the US dollar either weak or strong. You go and watch your charts, study your charts, and then look for good trading opportunities. Search for trade opportunities. That means based on your strategy, there are many strategies you need to create as a successful trader. You need to have good strategies that can give you high probability setup. So you just look for entry level and then execute your strategy when you are sure of a high probability setup. You repeat the process. So that's the way it goes. It's a flow. It's a continuous flow, more like a feedback process. So, and then why do people fail? Now, the problem associated to using trade. No, when I started trading, I told you that when I was in high school, I was exposed to forex trading. You know that what really inspired me to want to be a forex trader was, I think I was in SS1 then when I met one man in the church then that drove Homer Jeep. That time Homer Jeep was raining. Homer 2, I think that was around 2005 or so, 2004, 2005, where Homer Jeep was one of the talk of the town. Now you are talking of what cars are raining. We're hearing of a Range Rover. No, Range Rover is not even there. We're talking of what do you call it? A G-Wagon, Brabus. Those are the cars raining now. But then, as of 2005, 2006, the cars we talk about were Hummer 1, Hummer 2, Hummer 3. So there was a day I went to church, I think for a church program somewhere, and I saw one man. This man drove Hummer 2 to church. Very big Hummer. And then I was like, wow, you see a lot of young people were pushing him. You must give us money. They were harassing him, young boys. That the man. But some policemen had to even carry him away because they were almost harassing him. They were like, okay, if you drive this kind of car, come park for this place, you know, go settle boys. That's what they were saying. But then I was just in SS1. And in my mind, rather than joining those boys to harass the man, because I can't do that, because I believe if you give $1 million to a poor man, he's still a poor man. What makes the man rich is the mind. It's not the money you give him. So I begin to think, why is this man so wealthy? Money, why is he so rich? So why is he rich? So I did my investigation, due diligence. I found out that the man was a forex trader at that time. He made millions of naira trading forex. And that time I told myself, I'm going to learn how to do forex. But eventually, unfortunately, forex was still very new in Nigeria. A lot of people don't know anything about forex. People lose money, especially close to the global meltdown in 2008. People that invested in stocks and those things, you must have heard about the global meltdown. It affected the market. But that global meltdown, a lot of persons still made money that period. This is all about knowledge and understanding. I didn't have anybody to teach me how to trade, and I was basically looking for where I would learn. So eventually, I met some people that told me about a seminar. I went for that seminar. The man was just showing us the chart, and it was very confusing. But then I kept it in my mind, and some of my family members were also saying some things about it. So I kept learning, observing, and then eventually, when I got into the university to study engineering, I met some other young university undergraduates who were also interested in learning forex, and we decided to be learning on our own. Sometimes when they download a book or a video, we share books and video to learn. When they have small idea, they teach me. If I have a question, I can ask them, or we can share idea. That's basically how I learned. And yes, it was not really a very, very easy process for me because I kept losing money. I gained money, I made money, but I also lost money. Why? Because I didn't understand that the training, forex trading, being successful at financial trading is 90% psychological, 10% more of your knowledge. It's good to have, don't master your psychology. You will always lose, even if you are a good, you have good theories of the market. So why do people fail? Why do people lose at trading forex? This is it. Um, can you hear me?
Yeah.
Okay, now, so when you stake too much capital in a single trade, you lose money. That is, you have to limit your risks to 1 to 3% for a single trade. And a series of successful trade execution has wins and losses evenly distributed. Means that um, every strategy you execute, there's always wins and losses evenly distributed. You don't know the trade that will be actually a win or a loss. So what you just need to do is basically welcome Catherine and Victor. You came quite late because we're rounding up, but I'm going to upload this video to the YouTube channel and you do where to watch it. So when you limit your risk per trade, you should be able to make gains. So you don't see the in the long run. You don't see your intermittent or momentary losses as actually loss. See it as a cost price, something you need to pay to be in the market to make gains in the long run. And then not enough knowledge in the forex market, just like the Bible says, so you to show thyself approve. You need to learn. Some people don't know anything about fundamental or technical analysis. They just go and play street. Oh, they say it's making money. Let me just try. You won't learn, and you want to make money overnight. You read, you read the, you read the engineering for how many years? 5 years.
No.
You read medicine for. Can you mute your mic, please, John? Please, can you please put the chat of our WhatsApp group chat again for the benefit of people that are just joining up, because we'll share our information there. You read engineering for 5 years. You studied medicine for 6 years. What makes you think you will study forex under 1 month and become rich overnight? It's a lie. Nothing like that. You need to dedicate time. It's true that our training session can be very short because, of course, I'm not going to train you forever. But you have to learn as long as possible. You don't quit. Even me, I keep learning. Warren Buffett is the world's best, richest financial or stock trader. He still learns every day, and he also loses. It's not every time he wins, but it's not that you always have a cumulative wins. You know, there's always you win more than you lose. So, and then another one is over trading. When I lose one money, I want to get it back. Over trading and revenge trading. Oh, you lose. Oh, I was right. Don't try to be right when you are trading the market. The market is always right. Don't try to prove the market right, wrong. You get wounded, your account will be wiped out. I've been there before. So I've learned from my mistake in a hard way. So whenever the trade moves against you, take it in good faith, cut your losses and move on. He who fights and run lives to fight another day. Now, not following your rules and strategy. When you have a very beautiful you, you don't
For
have
instance, again, don't
you
touch.
don't have discipline. Can you mute your mind, please? I'm having some background noise. Everybody, mute your mind, please. I'm just going to do it.
Hello, Elijah. Could you please mute your mic? Hello, sir. Hello. We are not getting you. Hello, Felix. Felix, we are not getting you.
Okay. All right. Okay, you couldn't hear me. Let me go back. I just saw that my microphone was muted. Okay. Can you hear me now? Can you hear me now? Okay, let me just go back Module 5 again for the benefit of everyone. Can you hear me now? If you can hear me, let me know. So for Module 5, I said that these are the learning outcome. We are actually going to participate in this, and this. We have general introduction to Forex, and then participants will be able to understand market theory, and then candlestick pattern, and then technical analysis, identifying market trend, and then module 4 is introduction to binary options, applying the strategies. Module 5 is risk management, understanding high probability setup, and module 6 is practical session, do it yourself, and module 7 trading psychology, building confidence. That's basically what this forthcoming financial trading basic option course will entail, and it's going to start when anybody with a good laptop. You just need someone that has a good laptop or a good phone to participate in the course. And then we recommend you use a PC because you show that you'll be able to see the charts clearly. And then with a good stable internet connection and also availability of time to participate in it. And the price for the training is usually $100, but we decided to slash it down from $100 to, for those in Nigeria, we pay 15,000 naira. That's $40 for international. If you are outside the country and you want to participate in it, you pay $40. But Nigerians will pay 15,000 naira. Then for women, for every woman, every female participant that want to participate, because of our partnership with Pan African Women Network, we're able to negotiate a fair deal of discount for over 35% discount for every female participant, because we believe in women inclusion in leadership and decision making, both in business and every sphere of life, leadership, politics, and what have you. So we believe that, okay, to encourage women to participate in this, we just had to slash the price down for them. So women are going to pay $25. That's 10,000 naira for Nigerian women. Non-Nigerian women, $25. Nigerian men, 15,000 naira. Non-Nigerian men, $40 US. So for you to participate